Well, it's great to have you with us this morning. And as we mentioned, the U.S. futures are pointing to a positive start on Wall Street today. After several rocky weeks where investors had to assess new thinking on interest rate cuts in the United States, not to mention some of the geopolitical uncertainty we've been watching unfold, now the focus is on the profit picture. This week in the U.S., you have 180 companies associated with the S&P 500, representing about 40% of the index's market value, that will be coming out with results. We've already seen some of those. Whether the earnings story is strong enough to change the sentiment story, remember the S&P 500 has already come down about 5% from its March peak. The TSX has come about 2% off its recent record highs. We will find out. But to set the stage, Adam Johnson joins us. He's founder and author at the Bullseye Brief. AJ, great to see you. And I guess when it comes to the earnings stories that are in full force this week, what are the kinds of things as an investor that you're watching to see?
I want to see a couple of things, John. First of all, I just want to see top line growth, right? I mean, how much money is actually coming through the front door of these corporations? Because that's, I think, an important indicator about the economy as a whole. Number two, excuse me, I want to see bottom line progress, right? Earnings. In other words, how is profitability? How are the margins at these companies? I think actually we are going to see an impressive number of surprises. John, each of the past 2 quarters, we have seen the actual results beat the estimates by about 7%. And I think that's going to accelerate because inflation has come down. The economy has grown faster than we thought. And I actually think that we're getting past a lot of that negativity, the uncertainty. Is there going to be a recession? What's going to happen? We are all so certain that there was going to be a recession. And when CEOs feel that way, they don't spend money. So they rein in the capital expenditures. And that just kind of puts a damper on obviously spending in the economy as a whole. We're past that. In fact, if you look at the CEO surveys now, they're quite optimistic. So that's what I'm looking at. Top line, bottom line, and better than expected results, John. I think that's going to be, or those are going to be the themes for this reporting season.
Adam, match that up with where we've seen a stall in the momentum story for stocks. A couple of standout areas that I've seen weaker since the S&P 500 hit its peak would be some of the rate-sensitive names. Real estate stocks, for example, as people have been reassessing what happens on interest rates, but technology stocks as well, which had that huge run-up, they have seen their upside capped. And I do wonder, since so many of the big technology companies are reporting this week, how are you thinking about that sector right now?
Well, I own them, so I'm not getting a whole lot of sleep, John. But, that comes with the territory. That's fine. I think there's actually a tug of war happening right now between trying to figure out which matters more. Earnings on the one hand, and I'll vote for that, versus interest rates on the other, the great rate debate. And I think we're getting to the point, John, where we're kind of over it. I'm certainly over talking about the Fed, but also, if you're buying stocks simply because you're expecting rate cuts, that's probably not a good reason to buy stocks, right? That's what weak-handed investors do. They look for something external as opposed to growth within these companies. And so I think ultimately earnings matter more. And the fact that we've only pulled back, John, by, as you just mentioned, 5% from all-time highs, with the expectation that not only would we not get 6 rate cuts this year, because that's what we thought a few months ago, we might not even get 2. Fed fund futures right now are calling for one single rate cut in November, and there's only a 50-50 shot that we'll get a second rate cut by December. So for stocks to actually be only 5% off the highs with so many rate cuts having been taken off the table, that tells me that people are doing what I'm doing, which is looking to earnings. And ultimately, earnings are a far more compelling reason to own stocks.
Earnings are also just they're a snapshot in time. They allow us to reset the table, I suppose, based on what you're seeing. But, in the financials group, we get a lot of questions from our audience about bank stocks. You watch them very closely in the United States, the money center players. Let's use Bank of America as an example. So Bank of America comes out with quarterly results last week. The market initially responds negatively. The shares are down. But ever since then, the stock has been trending higher. I think it's now trading above where it was when they reported earnings. How do you feel about investing in some of the banks right now?
Well, I own Bank of America, and I'll tell you why, John. It's so cheap. Trading at about book value. And as you just mentioned, right after earnings, which were just fine. There was nothing in the earnings report that to me was concerning. The stock actually traded at a discount to book value. And I think that just speaks to the mindset right now, where so many people are just focused on interest rates when they should actually be focused on the fundamentals. Credit quality at Bank of America is extremely strong. Trading profits at Bank of America, I mean, they make $32 million a day, John, in profits. That's not commissions. That's just trading profits. Bank of America CEO Brian Moynihan was talking about credit quality. He said our borrowers, Main Street America, as well as small business, doing very well. They're not concerned about credit quality. In fact, they actually reduced the amount of money they had to set aside for bad loans because credit quality is strong. So the banks aren't getting the respect they deserve right now, and that is simply a function of everyone, again, still focused on interest rates. Get over it. The great rate debate is no longer relevant. Focus on fundamentals, on earnings, on credit quality, on the fact that there is no recession, on the fact that there is growth. And, oh, yeah, there is this thing called an election, so we got to pay attention to that. But fundamentals are much stronger than a lot of people believe, John.
Yeah, I suspect we'll be talking a lot more about the election as we roll through the year. Real quickly before I let you go, people have been keeping close tabs on what's happening with the price of oil. Energy stocks, we get a lot of viewer questions about them, and companies associated with the energy sector, a lot of the pipelines as well. I know that one name that you've been pretty constructive on is Energy Transfer. Why is that?
Well, John, call it 9 and 9. Trades less than 9 times earnings and pays a 9% dividend. There are not too many companies I know that pay a 9% dividend. And by the way, it's not because there's any risk here. Typically when a company pays a dividend that's that high, you say, oh, there must be some problem on the horizon. No, there's not a problem on the horizon. Credit quality at Energy Transfer is very strong. It's a limited partnership, an LP. And not everyone can, in fact, a lot of institutional investors cannot own LPs in this country. It's just written in their bylaws. But for people like you and me, thoughtful long-term investors, this is a wonderful, wonderful company. It's the largest pipeline and midstream asset operator in the U.S. Again, Energy Transfer, ticker ET. I owned it for a number of years, bought it at $4, wrote it up to 14, sold it so that I could then deploy some capital and put that into AI stocks. That worked out very well. And now I thought, hang on a minute, go back and buy that ET. It pulled back ever so slightly recently. And so I bought it again around $15. I think the stock can go north of 20. And you say, that's only $5. Yeah, but that would be 30%. And along the way, we'll collect a 9% dividend and own a very, very high quality, very well-run company that is arguably the largest in its space. So Energy Transfer, yeah, I absolutely love it. And in case you couldn't tell, I do enjoy talking about oil, John.